Our overriding investment philosophy is really long-term, value-focused.
AFIC's very much a long-term investor. Our investment time frames 5, 10, even 20 years. That's the way we look at providing returns to our shareholders.
I think the best way of comparing AFIC's long-term performance is number one against the index, and we have outperformed the index over 80 years.
Another aspect of that is the low MERs that we incur. The costs are between about 0.15 to 0.25% of the portfolio.
Just need to be aware in terms of comparing different vehicles, the different tax positions and the different fees that are available. AFIC is an active managed fund. We look very closely at the stocks which go into the portfolio. We're very much a long-term investor, so those stocks need to stand the test of time through different business cycles. What you find with something like, for example, an exchange-traded fund, that's made up of all stocks within a particular index. So there's no discretion about what stocks are actually in and out of that particular fund. And we've certainly seen over a long period of time, returns or good investment returns aren't necessarily about the stocks that you own. It's also about the stocks you decide to preclude from any portfolio. I think the peace of mind that AFIC provides is that because we are very much a long-term investor, there's quite a long history of performance within the company. There's quite a number of experienced directors and investment managers within the team.
We do have the advantage of long-term knowledge, a memory of the market. If you're trading a portfolio, you're going to be constantly paying tax, whereas we hold the shares for the long term, so we're not paying tax along the way.
This means that the capital gain that we've made on the investments that we've made are at work for the shareholders, earning a dividend yield and earning additional capital gain without having that impost of tax. Well, markets have certainly been very turbulent in recent years, and this creates quite a lot of uncertainty for investors, and I think it highlights one of the particular benefits of being in a listed investment company such as AFIC.
LICs like AFIC have a really stable investment platform. The closed-end fund structure that we have means we only have a certain amount of funds available to invest at any one time. It's not influenced by the ebbs and flows of funds because of investors wanting to put more or less money into the particular fund.
That means you can take a long-term investment approach without worrying about the fact that people will come along and withdraw their money. LICs, which have built up some reserves, do have a capacity for, in the short run, to, as it were, subsidise or maintain a dividend.
So that we can continue to pay to our investors the same dividend that they received when the economy was strong.
Many people rely on these companies for their living expenses, so something that's a little bit more certain about the income is very valuable.